Welcome to Talk Tickers. We're your shortcut to understanding what really matters from today's key earnings calls.
Today, we're diving into Canadian Natural Resources' first quarter for 2025. And wow, they certainly kicked things off with some big numbers.
Big numbers indeed. Record-breaking, actually. Let's start with overall production.
Yeah, highest ever quarterly production. They had about, 1.582 million barrels of oil equivalent per day. Just massive volume.
And within that, liquids were also a record.
Yep, record liquids too, around 1.174 million barrels a day. And what's really interesting, is that 79% of that is what they call long life, low decline.
Right, the stable stuff.
Predictable.
Exactly. Assets that just keep producing reliably over time. Less drop-off.
Okay, and it wasn't just liquids. Gas production.
Another record. Quarterly natural gas hit 2.451 billion cubic feet per day. So strong across the board on volume.
But the number that really jumped out, I think, was the synthetic crude oil, the SCO, from oil sands mining. Oh, absolutely. That was huge. Around 595,000 barrels per day. I mean, that's a 34% increase compared to last year.
34%.
Yeah.
And the highest gross production they've ever had from mining and upgrading in a quarter.
Ever. And here's the kicker. They did it while keeping operating costs for SCO really low. Industry leading, actually. $21.88 per barrel.
Wow. So record production and tight cost control. That must have flowed through to the financials.
You bet it did. Adjusted funds flow came in around $4.5 billion.
Okay.
And adjusted net earnings were about $2.4 billion for the quarter. Pretty strong results.
And it looks like they shared the wealth with shareholders.
Definitely. They returned about $1.7 billion total. That breaks down into $1.2 billion in dividends.
Right.
And another $500 million spent on buying back their own shares.
And they managed to pay down debt, too.
They did. Reduced net debt by roughly $1.4 billion. So strengthening the balance sheet at the same time.
Good to see. And for dividend investors, another piece of good news.
Yep, another hike. A 4% increase to the quarterly dividend. It's now 58.75 cents per share.
And that makes it, 25 years straight of increases?
25 consecutive years. That's quite a track record.
It really is. All this while actually trimming spending a bit.
Yeah, that was interesting. They reduced the 2025 capital budget by $100 million. It's now $6.05 billion if you exclude abandonment costs.
But crucially, they said no impact on planned work or production targets.
Exactly. So finding efficiencies, not just reacting to prices. Okay, so let's maybe dig a bit deeper into how they achieved all this.
Yeah, let's do that. Starting with that massive SCO number from oil sands mining.
Yeah.
What was behind that?
Well, a big part of it was getting the benefits from projects they just finished, specifically a reliability enhancement project and also work on the Scotford upgrader debottlenecking.
Okay, so basically making the existing kit run better and more consistently.
Pretty much. Removing choke points, improving uptime. These things really add up when you're talking about that kind of scale.
It wasn't just new stuff coming online then. It was optimization.
Right. And they also talked a lot about, their internal culture, continuous improvement, strong teams driving cost cuts and organic growth. It seems embedded.
Okay. And acquisitions played a role too, right? Those Duvernay assets they bought late last year.
Ah, yes, the Duvernay. They seem really pleased with how that's going. Production results and cost reductions are apparently already beating what they initially expected.
So hitting the ground running with those.
Seems like it. Shows they know how to integrate assets quickly and get them performing.
Okay, shifting gears a bit to conventional oil. Primary heavy oil production was up 9%. What drove that?
That was mainly down to good results from their multilateral drilling programs.
Ah, the wells that branch out underground.
Exactly. Drilling one main wellbore, then multiple legs off it. Seems like that technique is really working well for them in heavy oil.
Got it. And then North American light oil and NGL's natural gas liquids saw an even bigger jump, right?
Yeah.
30%?
Yeah, 30% increase there. They pointed to the Duvernay assets, which likely ties back to that Duvernay acquisition.
Makes sense.
And also strong results from drilling in areas with liquid-rich natural gas, so getting contributions from multiple angles there.
You mentioned cost improvements in the Duvernay. They're targeting like a 14% cut per well this year.
Yeah.
That's significant. $1.8 million per well.
It is significant. They mentioned optimizing well lengths and tweaking their completion designs, basically fine-tuning the engineering to drill and complete wells more cheaply without sacrificing production.
Smart. Even thermal production, the steam-based extraction, saw a bump.
Yep. up 6% year over year. They credited a capital-efficient pad development program. So, again, finding ways to grow production without massive new capital outlays.
And they're shifting some capital around within thermal, moving focus from Kirby to Primrose.
That's right. Apparently, a recent CSS pad, that's cyclic steam stimulation at Primrose, performed really well.
Okay.
So they're pivoting, putting more capital towards Primrose now. They're even planning to drill a CCS pad, maybe with carbon capture there later in the year, following the good results.
Makes sense. What about longer-term thermal growth? Jackfish and Pike GGD projects.
Still progressing. They're targeting new pad production from Jackfish in 2025 and Pike in 2026. So those are sort of the next wave of thermal growth coming online.
And that solvent test at Kirby North. Solvent recovery over 80% sounds promising.
It does. Using solvents with steam, could lower emissions and costs if it works well. High solvent recovery is key for the economics. They're planning some workovers, like, tune-ups in Q2 to try and improve things further.
So gathering data for the future there.
Exactly. Need that data to figure out how to best apply solvents at Kirby and potentially Pike down the road. Maximize efficiency.
Okay, let's swing back to the financials. You mentioned the strong position. Can you flesh that out a bit?
Sure. Debt-to-EBITDA, a key leverage metric, is sitting at just 1x. Very healthy.
Right.
Debt-to-book capitalization is also comfortable, around 30%. And they've got plenty of cash and available credit, about $5.1 billion in liquidity. Gives them a lot of flexibility.
And that low break-even point they keep mentioning. Low to mid $40 WTI.
Yeah, that's really important. It stems directly from that continuous improvement focus we talked about. It means they can weather lower oil prices much better than some peers. It provides a buffer.
And they seem pretty clear on how they plan to use their cash flow.
Very disciplined, yes. 4 pillars, they call it. First, maintain that diverse asset base, especially the long life, low decline part.
Okay.
Second, maximize shareholder value through smart capital allocation and efficient ops. Third, keep strengthening the balance sheet. And fourth, return capital to shareholders' dividends and buybacks.
A clear framework. Good for investors to understand their priorities.
Yeah, absolutely.
Let's just quickly circle back on those Duvernay assets again. Sounds like integration is going smoothly.
Yeah, performing as expected, maybe even a bit better. They're focused on cutting costs, boosting production. They mentioned applying learnings from the Montney, another similar play where they have a lot of experience.
Synergies in action.
Looks like it. And they're targeting about 60,000 barrels a day from those assets this year. So it's a meaningful chunk of production already, seeing lower drilling and completion costs there too.
Got it. And the mining swap owning 100% of Horizon and Albion soon.
Yeah.
What's the main benefit there?
It's really about optimizing the combined operation. They expect to get better use out of heavy equipment, share warehouse inventory, parts, services more effectively across both sites now that they'll own it all. Should lead to more efficiencies.
Okay, makes sense. And in thermal, you mentioned they have some spare oil handling capacity at Wolf Lake Primrose.
Yeah, and that capital shift towards Primrose, where the wells are performing strongly, helps fill that capacity. The goal is basically to keep the steam plants running full tilt year-round, so they adjust development plans to feed the facilities.
And that $100 million CapEx cut, just to confirm, driven by efficiency gains, not lower oil prices.
That's what they emphasized. Continuous improvement paying off across the board, conventional thermal mining. Lower drilling costs, cheaper facilities. They even hinted more savings might be possible in future years.
That low break-even seems pretty robust then.
It does. And management stress, they watch cash flow weekly and can adjust capital plans quickly if needed. So they're staying agile.
Good to know. One last operational point to the Horizon turnaround next year. Anything notable?
Main thing is the 2026 turnaround should be a standard duration, maybe 30, 35 days. They did manage some maintenance this year on the back-end units without losing production, which speaks to the reliability work they've done.
Okay. Right, let's move to our This Is Not Financial Advice segment. Time for some outrageous but plausible trade ideas based on the call.
All right, idea number 1. Given how well Canadian Natural seems to be integrating the Duvernay assets, maybe even beating their own expectations and their focus on driving costs down further there, consider going long Canadian Natural. The outrageous part is betting specifically on potential upward revisions to their Duvernay production guidance in coming quarters as these efficiencies really take hold.
Interesting. So playing for an upside surprise driven by that specific asset integration success. What's the other side of that trade?
Okay, to make it a pair trade, maybe look at shorting a competitor, specifically one that's maybe heavily reliant on just one shale play, perhaps a higher cost one, and hasn't shown the same knack for integrating acquisitions or driving down costs like CNQ seems to be doing in the Duvernay.
So a relative value play. Betting CNQ executes better in its new assets compared to a less diversified, potentially less efficient peer.
Exactly. You're playing the difference in execution and potential in that specific area.
Okay, that's one angle. What's trade idea number two?
This one focuses on the oil sands mining swap. Remember how they expect better utilization of heavy equipment between Horizon and Albion once they own 100%?
Yeah, optimizing their internal fleet.
Right. So the trade could be long Canadian natural, betting those synergies lead to even better margins in their mining segment. And pair that by shorting a major oil field services company that, say, rents out heavy equipment.
The idea being C&Q might need less rental equipment as they optimize their own, hitting the service company's demand.
Precisely. It's a bit of a second-order effect bet. Plausible if those internal efficiencies really materialize, but definitely requires some assumptions.
Outrageous but plausible indeed. And just to reiterate for everyone listening, these are purely hypothetical scenarios, food for thought, definitely not investment advice. Do your own homework.
Absolutely. So wrapping things up on Canadian Natural's Q1, it was really a story of records. Record production, strong financials, driven by solid execution across their very diverse portfolio.
Yeah, and that commitment to returning cash to shareholders alongside debt reduction and efficiency gains really stands out. The Duvernay integration seems key to watch.
Agreed. And their ability to trim the budget without hurting production forecasts really speaks to their operational discipline and flexibility. Lots going on.
Definitely a strong quarter. We encourage you, as always, to look deeper into Canadian Natural's own reports and consider what these results mean for your own view.
And the question we'll leave you with is, considering everything, the efficiency, the diverse assets, the shareholder returns, what aspect of Canadian Natural's performance or strategy do you find most compelling for their future? Something to think about. That's all for this deep dive on Talk Tickers.